Good afternoon, and thank you very much for joining us here. I'd like to first talk about our financial profile and how we have navigated on these very difficult and challenging times, as Francisco explained in his presentation. You can see that we have improved our EBITDA margin, we have positive free cash flow, and we've reduced our indebtedness. Therefore, we are becoming a reliable financial partner. Well, actually not. We are already a reliable financial partner. A reliable financial partner that is ready for the next phase in EV growth and that is ready to create value for its shareholders. Furthermore, we deliver on our commitments. At the time of IPO, we had a commitment on growth, we had a commitment on profitability, a commitment on net debt, and a commitment on shareholder remuneration. In terms of revenue, we grew above the market by 10 percentage points. In terms of EBITDA, we achieved a 12.7% EBITDA margin, record EBITDA. Net debt at 1.8 times, which is below the threshold we imposed at 2 times. And we maintained a dividend payout of 30%, except once during COVID. So what's next? We want to continue doing what we know best, and doing it with a clear financial strategy. And that clear financial strategy has 4 levers. First, growth, which is in our DNA. Second, transform that growth into profitability. Third, that profitability into cash generation, and therefore have a healthy balance sheet, being able to deliver better. How are we going to grow? We expect to continue growing mid-single digit above the market from between now and 2027, based mostly on 3 levers. First of all, market volume. We've explained in other parts of this presentation that we expect the market to recover. Secondly, through our positioning and gaining market share. And third, in EV, where we have a commitment to grow and reach more than 50% of our sales of parts by 2027, and therefore growing by 5 times. Furthermore, these sales are largely underpinned. 91% of our revenues between now and 2027 of sales of parts are already in our backlog of 55 billion. The backlog which we're presenting here is the backlog based on awarded projects and is based on the projects which are under production. And by the way, we will be reporting this backlog on a yearly basis from now onwards. As we explained also, we are committed to profitable growth. And that profitable growth will be based, first of all, on a margin expansion between 150 and 190 basis points, which will be based, first of all, on volumes leverage, and therefore operational leverage and fixed cost absorption. Second, by raising the bar operationally, as Patricia explained in her presentation, and therefore achieving a better margin. And third, by our commitment to the NAFTA region, where we expect to have double-digit EBITDA margin by 2026. Secondly, we're going to have an efficient capital employed, reuse of assets, CapEx execution, and selective CapEx investments. All of that to drive our return on capital employed from 14% to 17.5%. Furthermore, this commitment which we are now stating to the market is a very strong commitment also for the management team. And it's actually part of our long-term incentive plan as management to deliver on it as the same to the market. Just recapping on our capital allocation policy. Growth, which is part of our DNA, continue to focus on profitable growth. Second, leverage. Leverage between 1 and 1.5 times at the end of the period, and the free cash flow generation of between 300 and 350 million euros by 2027. Third, balance sheet efficiency, rating improvement on the one side and a focus on financing expenses and working capital management on the other. Fourth, M&A, by having a disciplined but active strategy towards complementary M&A. And fifth, a dividend policy, which we will maintain at a 30% payout ratio, but should grow as net profit grows between now and 2027. So to recap on what are our objectives and the commitments that we have for the market. In terms of sales, mid-single-digit outperformance. Part of those sales will be driven by EV, where our commitment is that more than 50% of the revenues of sales of parts will be electric vehicle driven, and that means 5 times the sales that we've achieved in 2022. Third, EBITDA margin expansion between 150 and 190 basis points. Fourth, net leverage between 1 and 1.5 times by 2027. And fifth, and this new commitment to the market, return on capital employed of 350 basis points expansion by 2027. Being our value proposition, finally, accelerating growth, strengthen our leadership in electric vehicle, improving our cash flow generation and having a prudent leverage, and having a smart capital allocation which includes an attractive shareholder remuneration. And becoming, therefore, the financial partner supplier. With this, thank you very much. And we will now turn into the Q&A section. Thank you.